Good morning and welcome to the Moneycontrol live stream. You are watching Markets with Santo and CJ. Well, get ready for a freaky Friday because the ghost of inflation is going to scare the living daylights out of the bulls on Dalal Street. If you look at the Nifty futures on the SGX Singapore exchange, they're indicating a 200 to 250 point cut on the Nifty. So clearly, yesterday's rally towards the end of the session was a major head fake, a false dawn of sorts for the bulls.
Who knows, we might see another short covering rally probably later.
I hope so. I mean, ghee shakkar in your mouth, but it doesn't look very pretty at this point of time. If you look at some of the cues that we have got ourselves at the beginning of the trade, the Wall Street took a beating yesterday after there was a statement from the White House that suggested that they are expecting, not a statement, actually news reports coming out of the White House suggesting that they're expecting the inflation number for May to be much higher than what the street is estimating at this point of time, and that has led to concerns that the Fed will probably accelerate rate hikes going ahead. Apart from that, if you look at the European markets, they also took a beating as the ECB finally, after more than a decade, literally, has now turned hawkish and is going to raise interest rates going ahead in the coming meetings. It has also suggested that its quantitative easing program will end come July 1st. So clearly a hawkish turn. Probably some would say it has come too late, because if you look at the reaction in the market, in some of the bond markets in Europe and the stock market, clearly investors are fearing that the ECB might be raising into a recession and not really when the economy is strong, which might be the case in places like the US and India. So, Santo, a lot of headaches, a lot of data points that have come out yesterday.
And yes, CJ, I mean, I don't want to sound very pessimistic, but wherever you look, you just see bad news. In the midst of all these local problems, you also have now liquidity going to get tighter at the global level, and that's clearly going to have an impact. The only good news among all this, this rain of bad news is that you're seeing good, strong inflows into domestic mutual funds. Even the May numbers were quite a surprise, which means that there is still faith. Now, whether it's faith that the market will do well, or is it due to lack of any other investment opportunities, that's still not clear.
I think, Santo, it's maturity. I think retail investors, as I've been telling you so many times, I think the retail investor has matured now. They have realized that these sort of opportunities where there are bear markets and a lot of selling pressure are opportunities for longer term investors who are looking to build a portfolio for probably their 10-year goals, 20-year goals, or maybe retirement. So I think probably that just goes to show, and there is increasing evidence now that maybe the retail investor is maturing, Santo.
I'll slightly differ with you on that, CJ, just because when you see the trend across cycles, you do see that there are points where the market does well, a lot of money comes into mutual fund schemes start doing well, and then people say that, finally we have managed to get the formula right. We saw that in 2007, we saw that again in 2016, where immediately after demon, a lot of money flowed into mutual funds, but 2018 there was a massive correction, and by 2020, the returns were hugely negative. In fact, when the market started rallying in 2020, for a long time, most of the people who were stuck at earlier levels just used the opportunity to get out. So people have not seen, many of the first-time investors to mutual fund have just seen the market go one way up, and even now returns are pretty decent. So this theory will be tested in, let's say, a couple of years' time if the market were to grind lower.
But Santo, I am pretty sure that we will pass that test also with flying colors.
So the sentiment is bearish, but it doesn't look like the market is close to making a bottom anytime soon. That's because there is still hope that you might see the market pull back, and probably that is what could delay the market from making a bottom anytime soon. That's what I feel.
Well, Santo, the market clearly is at a very precipitous state at this point of time, but there are individual stocks that are showing a lot of tendencies to make money for the investor out there. We have dished out selected 5 stocks that we believe could be in action in today's trade, starting off with
TVS Motor, CJ. Now it's not been a good year for auto stocks in general, but when you look at the best performers in the Nifty for 2022, you'll be really surprised that most of the names happen to be from the auto sector.
Yes.
Now with TVS Motor, it's been clearly one of the best performers in the two-wheeler space, which has taken quite a bit of beating. The stock is now at its lifetime high.
Yeah.
Now according to analysts tracking the space, TVS is one of the few companies which is uniquely positioned both in the internal combustion engine market as well as electric vehicle. The big hope of most analysts is that the company's electric vehicle products will continue to get a good response as they've already been getting. May numbers were quite decent, while they were not, of course, you can't compare it year on year, but if you compare it with April as well, 3 lakh plus units sold is an improvement. 3 lakhs plus units sold in May were an improvement over April. This apart, the company is trying to raise about 5,000 crore for its electric mobility arm, and the market is hopeful that it should be able to get it, given a good track record, dominant market share as well.
Well, Santo, actually, the outperformance of TVS is what worries me a little bit. I mean, if you look at the demand scenario at this point of time, while there was optimism in April that things were going to move ahead in a more smoother manner for the two-wheeler companies and the larger auto pack as well, and therefore we have seen the outperformance from the sector so far this year. But for me, the demand environment, especially for two-wheelers, still remains quite sluggish. If you look at the entry and mid-level segment, that is two segments that are still struggling to get any sort of traction. If you go by the sort of commentary that is coming out from the retailers association or the dealers association out there, FADA, they have been indicating that demand has been quite low, inquiries have been quite low at this point of time, especially in the rural area. Plus the wedding season, which was supposed to be a key trigger in these past 2 months, has not really been too much of a kicker for the two-wheeler segment at this point of time. We have to still see, the June month is still left, so maybe there is still some hope. But if you go by the numbers of other companies, the companies that came out in May, it doesn't seem like it has been that bigger, sentiment booster for the market. Apart from that, as I said, the upside to me seems a little limited, given that the stock has already risen 20% in 2022 in a market like this, outperformance like that. Clearly, it suggests to me that optimism is baked into the prices, and it is likely that maybe the story remains intact, but it may be possible that the re-rating opportunity might be very limited from here onwards.
Stock has already got derated, CJ.
Derated?
Re-rated.
Re-rated. Exactly my point. That is what I'm saying. Maybe it has already done what it had to do for 2022, and from here on, you could see a little bit of consolidation going ahead. So for me, if I were to take, probably if you were to ask me, will you put extra 10,000 out there in TVS right now? I personally would not take that bet at this point of time. One stock where I will probably not be taking any bets at this point of time is Bajaj Auto. The company has surprisingly come out with a notification suggesting that it will be considering a buyback offer next week. Now, this is a little strange from my point of view because, of course, this is probably going to be the first buyback that Bajaj Auto will consider in 22 years. So clearly, this is a tacit, indication in my point of view from the management that growth opportunities are very, very limited out there at this point of time. The earnings dynamics for Bajaj Auto are not looking very nice at this juncture, given that the export market, which was the main driver, that also has started to struggle. And we all know what is the story for two-wheelers in the domestic market at this point of time. That said, the company, the stock could see a near-term bounce, of course, because a buyback is happening. Now, the company has substantial cash on its book at this point of time, so there is clearly an opportunity to do a mega buyback. But we will have to wait and see whether the buyback stands to the expectations that the market has, whether it will provide a good opportunity for investors to book some profits in the stock who are, would have probably bought the stock 10-15 years ago. But for the near-term investors, I doubt that the buyback price will also be of any solace at this point of time.
Well, CJ, a lot of pessimism must already have been factored into the stock. If you look at Bajaj Auto, it's among the best performers of 2022 among Nifty stocks. The stock is up more than 20% for the year, as you pointed out. Also, compare it with the tech majors, which were the darlings till some time back. They've all come up very sharply. So I think this is a stock where most of the negatives are already priced in. Also, the chip shortage, which seems to have been the undoing of the auto sector in general. Bajaj Auto is a little less, I mean, not that it is not, but it's comparatively on a scale, it's less vulnerable because, it mainly caters to the entry and mid-level segment.
But Santo, Bajaj Auto itself has said that, their production is getting hurt by the lack of chips out there. I mean, in fact, they came out after the May numbers to reassert this fact that from March onwards, they have seen a clear deterioration in the availability of chips. So clearly,
Even
if there was demand out there, they just cannot capitalize at this point of time.
So I would say that when the stock is already priced that in, it still makes sense to hang on with it.
I don't know. At this point of time, I feel that probably if you bought the stock last year and you have seen 20%, 30% gains, maybe it will be time to book profit. That is what I would do. The next stock on our
Chalet Hotels, that is, it's a play again on the reopening.
Your favorite reopening theme.
Reopening trade, and it has most of its inventory in the top tier cities, as a result of which it stands to benefit from the uptick in corporate travel, which has anyway picked up in a big way. The March quarter numbers were slightly subdued. That was only to be expected given the renewed wave of the coronavirus outbreak, but since then both occupancy rate as well as rentals have been rising in March as well as April. The company says that it is well on track to get back to pre-COVID level revenues by the first half of this current fiscal. Earlier the previous guidance was the second half, so it's very much on track to get there ahead of time. So the stock has also performed well so far this year, and if you see it's risen by close to about 30% in a very volatile market. This is something one could go with.
Well, Santo, for me, I think 30% return is a very, very good performance from the stock so far, but probably this is the best it gets for Chalet Hotels at this point of time, given that there are two headwinds in my point of view. One, of course, which was already prevalent but has gotten worse, and one which has come out as a surprise at this point of time. Now, if you talk about the first one, is inflation clearly. I mean, given the sort of inflationary headwinds we are seeing, given the sort of expectation numbers that are coming out from some of the data providers, that inflation expectation is rising amongst consumers out there. I clearly feel that discretionary spending, such as vacations, such as outings, will probably take the biggest hit out there at this point of time. Yeah, you can argue that probably people have pent up demand and stuff like that. But for me, if you cannot at this point of time afford to take too many large spendings, I doubt that a vacation would be at the top of your list going ahead.
But Chalet is geared more towards corporate travel, not so much towards the vacation.
Well, talking about corporate travel, now the other headwind that I wanted to talk about is the re-emergence of COVID cases in Maharashtra. I mean, we have seen a big spike in COVID cases in Maharashtra. That could, for me, be a little bit of a sentiment dampener in the near term. We have so far not yet seen restrictions being imposed in the nature that we had seen during the third and second wave. But clearly, if this continues, if the cases continue to rise, there is a possibility that restrictions could come back, maybe a little bit milder than what we have seen in the past. But that will definitely be a dampener from a business perspective for Chalet Hotel.
Well, what's the next stock?
Well, Santo, the next stock is something that you probably would not, appreciate it. But one stock is the next stock is the new-age tech company called CarTrade Tech. Now, a month ago, we had covered the stock, Santo, and I had told you at that point of time that given the correction in the stock, I mean, it had fallen, 50-60% from its IPO price. I feel that probably value is emerging. And clearly, if you look at the performance, the stock has risen about 13% in the past 1 month. Now, clearly, this is a high growth story with multiple tailwinds, and analysts are of the view that higher digital spends from automakers as well as used car growth.
Quickly take a look at the market before that.
185 deep cut, about 185 point cut
down by 1%, and market breadth clearly negative. Almost 4 stocks down for every 1 stock that's up. Nifty Bank is down about 1%.
Yeah, and if you look at the second line stocks as well, Santo, they are almost on par with this Nifty and Sensex. The Nifty Mid Cap 100 index is down about 1%. While the small cap index is also down about 1.2% at this point of time. The advances, there are only 390 odd stocks advancing on the NSE, while almost more than 1400 stocks have started off on the negative foot at this point of time on the NSE. Yeah, so coming back to CarTrade, as I was saying, so one of the arguments, of course, has been that valuations became just too cheap. Now, if you look at the fundamental side of the story as well for CarTrade, the rising digital spends from original equipment manufacturers, automobile companies out there, plus the used car market in India, that is clearly growing at a very, very fast tick. These two, tailwinds are clearly an addition to the growth story of CarTrade. This is one stock that a lot of brokerages have recently also turned very positive on. Nomura, about a month ago, initiated coverage on the stock with the buy rating, suggesting that this could be one of the best performing stocks in the auto ancillary or auto linked sector out there, given its rapid technological advances as well as tech platform and the rising addressable market or the expanding addressable market for the stock.
Well, quick take. There are indications of some kind of bargain buying happening in the stock, over the last few days. But CJ, I'm still a little concerned. Companies are not making profits at the operating level, and I would wait for some time before I see that. Given the market conditions right now, I think this is something that I would give a pass to. The last stock on our watch list is ITC. Again, CJ, a safe bet in this market. Safe bets are what you should now be looking for. The companies, all businesses are showing good strength at this point in time, be it tobacco, hotels or paper. Yes, FMCG could be a bit of a drag. However, the thing which is still going in favor of the company is that it's still an under-owned story.
Is it?
The stock has performed well over the last 2 or 3 months. It's now up by close to about 30% for this year itself. But despite that, the stock is still, I would say, under-owned, and the story is not finding too many takers. So that being the case, probably you're unlikely to see any kind of major correction here.
Well, Santo clearly, ITC has been an umbrella in the market so far for most investors. Actually, not most investors, it's the foreign institutional investors who have been chasing the stock all of this year. Now, if you look at the strong performance of the counter this year, I feel that it clearly has now baked in most of the optimism for FY23 at least. We don't yet know how FY24 will materialize, given the usual concerns around taxation on cigarettes and whatnot around ITC. But for FY23, the strong earnings growth clearly has now been factored in by investors. You have seen foreign investors being the biggest buyers. I mean, while they've been selling everything else around us, ITC is one of the few stocks where they have actually been buying consistently throughout 2022. But for me, I think the reason why I feel that the upside going ahead will be limited, and therefore probably this is one stock I don't want to bet at this juncture, is because retail and MF were the one who got into ITC quite early, right, Santo? I mean, you will remember the stories out there last year about retail disaffection and dissatisfaction, plus mutual funds who were mostly value oriented. They had also taken big positions in ITC. Now, all of those two cohorts of investors will definitely utilize any sort of a rally on the stock to trim their positions, to take profit, because this is probably one of the few opportunities that ITC might provide you in the near term to actually take profits. And I think therefore, for me, the upside is unlikely to be too much going ahead in the next 6 months of this year. The stock has done great. Probably just like, I mentioned about TVS Motor, the upside from here would be limited in the next 6 months, and therefore I will probably pass it at this point of time.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching this, and please do let us know about your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And as usual, stay tuned to moneycontrol.com and the Moneycontrol app for the rest of your financial news. We'll catch you again 3 p.m. live with all the day's action. Till then, have a great trading session if you can, or at least try to avoid taking any risk.
You always seem to address the bulls and not the bears. Probably they're having a great time out there.
I did. I just said, just don't take any risk that you don't want to take at this point of time.